Coin traders, what is going on? Thanks for joining me for the show. Looking at Algorand ALGO on that ticker. Very nice pump over the last few weeks, and right now going to be looking at a little bit of period of consolidation here. And now we did have a pretty big resistance line at 1375 that we've actually been toying with right around the heart line of this overall consolidation pattern so far. So if we actually zoom into the 4-hour, for example, you can see just how well this line fits right in this heart line for higher low, lower high, higher low, and then now looking like we are breaking it again, looking like a little bit more upside. So we will be testing some of these highs to see whether or not we can get a nice bullish breakout and start to test the 15-cent psychological level just overhead. Now, if we switch over to the 6-hour chart here, looking at a very nice exponential moving average ribbon to the upside, we do have a little bit of a gap starting to increase between all of the exponential moving averages, so we are starting to see a sign of strength in that move. So once we actually did get a very nice cross and confirmation and back test, we were looking at holding support on the way up this whole way. Specifically, the 26 has been a very nice period of support, and then right now looking at a pretty big support zone between the 26 and the 50-period EMA right now. And then right now on the current move, still reclaiming that 26 once again. So we will be looking at that soon to be making sure that that doesn't actually flush as well. Now, one of the great things on this 6-hour chart too is just the size of the lower shadows here on these sell-offs. So big flushes and sell-offs, a lot of dip binds. That's why we have very nice shadows on the downside. And especially after we see that we have we have follow through and confirmation of that. So big pullback, big lower shadow, nice rally and confirmation and follow through. And so right now too, if we do actually pull up the volume, you can see that we are already looking at our peak volume climax coming in for a bearish volume. So big flush did hold support. It's a very nice sign, especially on a big bearish bar. Next big sell-off was actually not as substantial and actually did meet a little bit of fall off selling pressure. And then ultimately we did get our low flush, and then we did see a lot of dip buying. And then now the most recent flush has actually seen a taper down in all bearish volume, which kind of does point to a little bit more of that consolidation before heading back to the upside here. While we're looking at the 6-hour chart right now, though, do want to point out how we have a very significant line of support and previous resistance here right around just shy of the 13-cent level. So big point of closing support right after this lower shadow. And then looking left a little bit more, big point of closing resistance on the 6-hour chart. So ideally, that's going to be a level that holds very nicely. And especially right now, we are looking at a closing level of support coming in right around 1355. Overhead resistances, though, we are going to see a very strong resistance point coming in at 1439, followed by another strong resistance point at 1461. So still plenty of resistance up overhead before we can actually confirm the next breakout and start to see new higher highs. Now I want to flip over here to the daily chart. Do have technical indicators pulled up, and a few things to look at. First, on the very bottom, we're looking at stochastic RSIs being right around the 30 line, having a pretty nice bullish cross so far, but that's not necessarily as significant just yet. We do need to see a break of these resistance points, but right now we are looking especially favorable for that to happen, since if you look at the most recent bullish candles, we do have engulfing between the bearish candle that closed just yesterday and then also the bearish candle that closed prior to the previous bullish bar that we had just closed before the recent bearish day. Now, if we look at the volume as well, not as significant as the bearish day, yet the body on the bearish day was actually smaller. So volume that closed yesterday was 25.059 million. The volume that closed previously on the bullish day was 20.412 million. So a lot more volume came in yesterday, yet we still maintained a very nice body that was only about half the size of the previous bullish bar. Typically, if there were a lot of strength in this downside move, especially with increased volume over the previous bullish day, we would have actually seen the candle have a body that would completely engulf the previous bullish day. If that concept doesn't necessarily make sense, drop me a note in the comments sections below, and I'd love to be able to clear it up for everyone. Now, so especially as we zoom out here and look at the volume a little bit more, you can see that especially coming off the bottom of the move, overall increasing steps for higher highs on volume here. So very nice increasing bullish volume here when we did make our current trend high as we do enter consolidation right now. And so like we mentioned, a little taper off in the selling pressure, especially as we go into a tightening range. That puts us in a lot more favorable setup for some consolidation without coming into a full-on flush first. Now, with that said, if we actually go ahead and look at RSI, Relative Strength Index, we're actually looking, although it might seem even, and essentially it pretty much is, we're actually looking at lower highs on the RSI. So for the peak of the trend right now, 78.85, the previous move when we did top out at a high of 13 cents, when we did smash into that resistance, we were looking at a RSI of 78.94 on the close. So just barely a lower high on these RSIs, which does mean a little bit of bearish divergence. So we know that we are going to expect a slowdown, which is why this type of consolidation, especially holding these supports and these exponential moving averages, is so critical. Now, if we actually zoom out and look at the start of the year rally, almost a similar type of thing happened where we had a bullish cross and actually rode these exponential moving averages up and actually started to go into semi-tight of consolidation formation pattern here. And if we pull up the RSI again, you can see that in that instance, we're looking at an RSI close of 76.68. So actually saw a lower high than what we saw on this current move, especially with two nice peaks on it. But what we have to be careful of is dipping back below the 70 line and actually seeing the RSI start to normalize pretty much in between 50 and this 70 line. Because what we saw at the start of the year was actually that was a very big signal of our peak coming in. And so on the current, if we actually do start to slip and are unable to maintain higher highs or actually retrace before catching a breath and seeing new higher highs first, that's going to be setting up to see a pattern pretty much like we were expecting at the beginning of the year, or what we saw at the beginning of the year. And so that would actually be a pattern that we need to keep our eye on here. Next, I do want to flip over into the 4-day chart and specifically want to talk about the current most recent candles here because we are above the 50-period EMA on this 4-day. And if we actually zoom out, you can see that that's the first time that that's happened since coming off of the bull market before making a bearish cross. So the fact that now we're actually shaping up to look like a bullish cross is going to be coming is another one of those good signs, especially after breaking so many of these big resistance points like we had, now being able to not only close above, but back test this 50 period as that support, hold it, and then now on the current 4-day, we are looking hopeful like we're going to get a little bit of that follow through. Now, one thing to note too is that if we actually look at the volume on this 4-day, you can see how apparent it is actually to get such nice increasing bullish volume on this move, just showing a lot of strength and blowing through a lot of these previous resistance points. So getting stuck up at these levels time and time again over the whole summer, yet meanwhile, in a few weeks, we've been able to actually rally up and smash through all of these strong resistance points. And especially because we have nice increasing bullish volume, is a very good solid sign for strength in a longer term upside move. Now, but with that said, we actually have to go ahead and look at the RSI here as well, because if we actually look at the RSI, you can see that the last time that we actually saw, and let's go ahead and get this chart filled in, the last time we actually saw overbought levels like we have experienced now, and granted we did see a close pretty shy at 71.76, the last bullish close that we had on top of the 70 line was back during when we saw basically our all-time high. RSI closed on this 4-day at 81.45. Prior to that, we're actually looking at a close of 92.27, back when we topped out at a high of 185 back in February of 2021. And so ever since pulling back and essentially riding this 30 line the whole way, more or less finding it as pretty nice support, we also know that we're looking at third lower highs right now on this 4-day. So it is possible and potential we could, every time like we have seen so far, start to pull back and actually see a pattern that would start to rally and actually pull back below the 50 line on this RSI, which would mean a dip in price. So again, if we can normalize and actually stay on top of this exponential moving average for this RSI, there's a very good shot that we will start to see stabilization of the price without a significant pullback. But historically speaking, every single time we have gone above the 70 line, we have pulled back and actually seen a downtrend on RSI below this exponential moving average for this RSI. Now, I do want to shift over to Twitter here, or X, for a second, just talk about a discussion we were having earlier. And if you're not following me on Twitter, go ahead and drop a follow. At @coin_trades is the handle. Looking forward to chatting with everyone there. Definitely a lot more active because it is a better community than having to post videos and stuff all the time. But I definitely love doing these updates for everyone, but definitely drop me a follow over on Twitter or X as well. But yeah, so this is kind of interesting because we have had Algorand slip out of the top 50, but we've also had the FTT token somehow find a market cap on top of Algorand. So just a very interesting sign for what we're expecting for this next crypto rally here. But anyway, jumping back into the chart here, and want to actually flip over into the weekly because a lot of similarities between the 4-day chart as well. Specifically, very nice 4-week-on-week increasing sloping volume, as we do have a complete break of both the 12 and 26 EMAs, as well as a confirmation back test. So now we are looking on the current week to be able to hold on top of 26 before finally finding a rally up to test this 50, which we actually haven't had a break of since just like the 4-day chart back before when we were looking at our all-time highs. Like we talk about with exponential moving averages, though, we do love seeing them just get extremely tight, and that's pretty much what we're looking at right now. So the gap between the 12 and the 26 getting really tight, but then also we do know that these are starting to get tight between the 26 and the 50 as well, especially zooming out. You can just see how apparent that is. So that does mean a very good sign for a bottom stabilization to happen before a finally longer term rally where we do look up to much higher highs. And so especially coming off of our pretty much effective all-time lows since looking back previously, back to before the COVID flush. And the thing is that now supply's way higher than what we were looking at back then. So effectively compared to the supply, looking at all-time lows effectively for this volume here. So the fact that we have been seeing that now setting a higher low and a continuous rally to the upside with this nice increasing bullish volume. There have been a lot of calls for lows down to 5 cents. I've never had that as a technical target or expectation. And so I think right now, especially at this point, that just seems extremely unlikely, because we would be looking at, if that actually did play out, a pullback would end up being about 60% from current levels. So I don't think that's essentially likely at all, in my opinion. But so do want to talk about a little bit of pullback targets here before we actually wrap up. So if we actually talk about Fibonacci retracements, if we look at from the lows just below the 9-cent level to current prices, then typically one of the targets we look for is the 38.2. Does have it sitting at 12.53 cents right now. And then below that, we're looking at 50 for 11.82 cents for the 50% retracement. This would actually line up pretty good with a previous resistance point that we saw back at the end of summer in the middle of August. Looking below that at 61.8 for 11.10. And this would also be another technical target to look for on the downside, but that would be a much longer term pullback target. And then below that would actually be 78.6, right around the 10-cent psychological. Like we said, though, definitely no signs of any type of pullback to those levels just yet. But pullbacks to that level would mean it would take an extremely long time, most likely, to get back to the current setup that we'd be looking at right now. So that's why it is so critical for longer term growth and especially shorter term upside to actually be able to hold some of those lower supports, which right now anyway, especially on this daily chart, coincide with a lot of these exponential moving averages. So overall, I think there's probably not a lot of excitement coming up in store since we're not necessarily looking like a breakout just yet. And especially with all this nice growth over the last month, we do still have plenty of opportunity and room to be able to confirm some downside supports, establish some consolidation levels, and basically confirm that this rally is going to hold at the current level without an immediate slippage like we've previously seen. If we can see that, then that will mean we're on our way to see the next stage of buying, which would actually push us up above the 15-cent level. So would love to know everyone's thoughts, comments, and predictions down in the section below. Do love getting back to each and every one of you. Do appreciate all the love and support as well. And if you haven't done so just yet, please hit the thumbs up, like, and subscribe if you did enjoy the video and this type of content. That is going to wrap it up for now, though. So stay safe, take care, and I'll catch you back in the next video.